What is going on, everyone? James Livingston here, back again, giving you guys another trading video, going over an indicator that I got a couple of requests on our last video to go over, which was the MACD and the RSI, and kind of how to effectively use them within your trading strategy. Now, first thing I want to let note is the MACD and the RSI are not necessarily individual indicators that are going to tell you yes buy or yes sell, and you should follow them entirely. They should be supporting indicators along with, the main ones: price action, volume, market structure, things like that. You should never be relying strictly on the MACD or the RSI. It should always just be to kind of help your judgment with your already predetermined analysis. So now we got that out of the way. Let's go ahead and focus on first the MACD. So the MACD, when you put it into your chart here, I'm on Webull. I do not change any settings on this one. So you can see right here on the settings, the fast length is at 12, slow length 26, signal smoothing at 9, input whatever. And you can change the colors if you want to. I leave them the same. And the same thing with the RSI. I do not change, the lengths or the RSI upper bands, etc. I don't even change the colors, none of that stuff. I simply leave it the same, leave it exactly where it is. And do it that way. It's not something, unless you want to get really advanced with it and really tweak it, you could, but personally I don't think that this indicator holds that much weight to the point where you need to mess with it. I think it's enough of a secondary indicator that you don't need to be toying around with it too much. But essentially, in short, go ahead and make the MACD a little bit bigger here. So the MACD is essentially a momentum indicator. It's the moving average, convergence, divergence. The way that I look at it is it's essentially showing you who's got the momentum at the moment, obviously based on the time frame. Now that's the key here for this indicator and for the RSI, in my opinion, is to use them to your advantage on the larger time frames to kind of get an idea of where momentum is heading. So if you use it on the daily, 4-hour, hourly time frame, you can get a general idea of maybe we're going to see an up movement in the next hour or two, or down movement in the next hour or two, depending on where the MACD is sitting. So the key here for the MACD is the MACD line has to cross over, the signal line, in order for us to see some bullish activity, and it needs to cross under the signal line in order for us to carry out some bearish activity. You can see even like right here in this little pocket, we had the crossover right here. You can see the price action also showed that we were getting a nice crossover. Now these are lagging indicators. As you can see, even the cross point was 2 days after this move started happening. So what you can use this to your advantage for is when you see this MACD line starting to ramp up aggressively, even if it hasn't crossed over just yet, you may be able to play a small momentum shift. This is on the daily time frame. So it works differently if you look at on the 4-hour, it might have showed it a little bit sooner, or the hourly, etc. But you look for that crossover, or when price action starts to sharply change direction, or price action starts to make the MACD sharply change direction to show a momentum change. Now, there's also a little histogram that gets shown on these MACD indicators. I use this O line, or the middle line I like to call it, as kind of like your plateau or your line in the sand of like who's in control, right? So if the MACD starts to go trend back above that line, even on like a small pullback, as long as we stay relatively at that line, don't show any crazy histogram momentum bars here, or bar graph bars here, we may just be having a little consolidation, a little bit of a retracement after a big move, etc. As long as we don't drastically drop right back down underneath of it, kind of like what happened right here, where we had to move up, and then we just absolutely pushed down. You can see the volume bars, or the momentum bars for the bears, in this case, on the histogram started to pull down, and then the MACD line and the signal line started to space apart right here. Right here, like what we're seeing right now, you had to push up. You can see price action reacted the same way. Then we started to pull back down, had a little bit of consolidation with the momentum, and now we're starting to break out again. Now we're starting to get into that territory where we may be hitting a resistance, and this is where you use your other knowledge, key levels, etc., to mark off, okay, did we reach a spot where we can potentially find ourselves pulling back now? We just hit into an area right here where, again, we have those reactions right on the daily. We had that pop up here, pop up here, pop up here, and then we had the kind of base out before it dropped down, came back up, retested right here, and since has fell down. So we're retesting that previous support or previous demand zone now is going to act as a supply zone or resistance. So I'm going to look for that. This could potentially be showing us as the MACD gets extended here that maybe there's a chance we have a little bit of a consolidation pullback just like we had back here. So you can use this to your advantage on mainly the larger time frames. Now the other one that you can use in coinciding with the MACD, and a lot of people do, is the RSI. The RSI is your relative strength index. So it's going to show you essentially if a stock is overbought or oversold, again, given the time frame you're looking at it. I think it's most useful on the larger time frames, just like we use the MACD for with the daily, 4-hour, hourly, even the weekly can help you set up for potential swing opportunities. But generally, the ground rules with the RSI is if it's underneath the 30 level on the RSI, it's typically considered oversold. If it's over the 70 level on the RSI, it's typically considered overbought. So you can use this to your advantage, again, on larger time frames. You have to, and I always say this with really any kind of analysis you're doing, you have to understand what time frame are you looking at it on, because that type of a move that you're looking for is going to correlate with that time frame. So you have to be conscious that if we are in overbought territory right now, we're looking at sells, we are looking at sells on the larger time frame. It's in an overall bullish trend at the moment. So we have to understand that while the trend overall is bullish, we may see just a small sell pullback. So we can't hold this thing expecting that it's going to sell back down into the 20s or into the teens again. You have to understand that now that we crossed over, certain areas or hit certain areas like we were talking about with the demand here, now, or sorry, with the supply here, now we may see this area turn into a bit of a demand zone. So the pullback is going to most likely be brief. It's not going to be anything crazy, but you can see the RSI is going to let us know, hey, on the larger time frames, we're looking a little overbought right now. Sellers might start to hop in, profit takers might start to hop in, or hop out rather. I mean, we're going to look for it to stabilize. Typically anything over the 50 middle mark on the RSI, so right around here, you're typically going to find a fairly neutral zone. So if price action was just above it and now is seemingly pulling back down, it's likely to get into that 50 area, at which case it may be a good time to consider a buy. If price action shows you maybe a reversal candle, if the MACD seems like it might start to either cross back over the signal line, if it goes underneath, or it looks like it's coming down to it and then bouncing off of it. Kind of like, let me see if I can find an example here. Kind of like right here. This is a decent example of one right here where he had the pullback. So the MACD line's clearly over the signal line right there. It came back down. Looks like it's going to sharply cross over. And then what happens? We get a reversal right away, and it gets a nice ping off of it. And you can see from there, even on the price action, had that bounce that one day. That wouldn't have necessarily been the day to enter it. Wait for consolidation back down and see if we can start breaking back up again, create that new low or that higher low, just like we did right there. And sure enough, popped up all the way to 120s back a while back, actually. But yeah, I mean, that's generally the gist of the MACD and the RSI. Just consider, the RSI is essentially, whether the stock's overbought, oversold. The MACD line is essentially showing you momentum. So you want to see those histogram bars also gearing up if you're looking at longs, or gearing down if you're looking at shorts. But you also want to see the MACD line start to either cross over the signal line to the downside for bearish or to the upside for bullish action. And like I said, RSI, overbought, oversold. It's just generally giving you an idea of how overextended or the underextended is the other word, a stock is, based on the price action. So once we get into this shaded area above 70 or below 30, typically on larger time frames, that is a signal to start looking for a potential reversal candle to get a nice little pop. And you can, if you're on the daily time frame, you can do swing trades off of this. You just have to understand, again, all the other principles that come in with this. what kind of a trend are we in on the larger time frames? Is this a sustainable bounce? How much of a bounce can we actually get off of this realistically? Like, no one knows where it's going to go, of course, but we need to be realistic and with the probabilities at hand. So that's pretty much it, guys. I don't want to make this super duper long. I want to just give you guys a quick video on the MACD, the RSI, and how I use them effectively. Like I said, it all depends on the time frame you're looking at them on and using / going off the data on for how you should trade them. If you're using them on the daily and the 4 hours, you probably look into longer out expiration contracts if you're doing options. If you're looking at it on the 15 to 30 minute, you may be able to do like same week contracts or next week contracts. And if you're looking at it on the 5 minute, you have to understand that it's quick. Like those 1 to 5 minute MACD and RSIs, they can switch in an instant. So just be mindful of that. But hopefully you guys liked the video. If you did, please do drop a like, comment down below, let me know what you guys think. Obviously, if you're new to the channel, or you've been coming here a couple times so far, don't forget to hit that subscribe button. It definitely helps me keep motivated, keep making these videos for you guys. Trying to teach you guys how to do this stuff right. And yeah, I'll see you guys in the next video. Peace.